Good afternoon, traders and investors. Will back here with another one. Hope you guys are doing well, especially after a day like today, guys. Another big red day in the markets, unfortunately, as our markets continue to plunge to lower lows here off of the back of rising yields and some tech earnings, which were good, but were not well received by the market, unfortunately, here. So big tech once again pulling down the markets. You can see here on the right hand side, QQQ down 1.91% and the SPY down 1.2%. Not much was spared today, as most of our indexes were indeed red. So today, guys, we are going to cover a few earnings that we have for you. We're going to cover Amazon, of course, as they were a shining star amidst all this red in the after hours here today. We're going to cover Enphase, our solar play. We're going to cover as well Intel, and we're going to cover Chipotle. So quite a few earnings to cover here. Was a big day. And we're going to cover our major indexes as usual and our major tech names as well, guys. So without further ado, we got a lot of cover today. So let's get right into it, yeah? So you guys can see everything pretty much red. If we take a look at the heat map here, it was led once again by big tech. Microsoft sacrificing most of the gains that they had in the after hours after their earnings. They just sacrificed them today, unfortunately. NVDA as well down 3.5%. Google and Meta not able to keep it up either. Google continuing to being plagued by their earnings. Meta, which had a substantially very amazing earnings report, in my opinion, down 3.73%, unfortunately continuing to plunge to lows. Apple down 2.5%, and Tesla and Amazon here during the day not contributing very well at all. And even our payments processors, guys, Visa and MasterCard down a bunch here. So pretty much across the board, except for a few areas here, some in financial, some in healthcare, were indeed red for the day. Utilities, one of our little green areas on the day. If you take a look at the one-day relative performance, you will see real estate, utilities, basic materials holding up their end, but unfortunately our larger weights just really sent us tumbling to the downside here, with most of it in the red. And on the 1 week, you'll see that the only positive area here was indeed utility. On the monthly performance, everything in the red by multiple percentage points here. So guys, our sell-offs do continue, but we may be due for a potential oversold condition right now, guys. It's getting pretty bad out there. The fear is pretty much widespread at this point. Are we potentially nearing a turning point? Well, here's a little tool that I like to check every now and then when the sell-off gets completely brutal like it is right now, right? So this is a chart here, guys, that shows us the give me a second. That shows us the highs and lows. This is the net new highs and new lows across all markets here. So let's take a look at the S&P 500. You'll see that the new lows is monitored by this little chart right here, right? So we'll put the market up against that. You'll see that ever since we've been coming down, we've been hitting new lows here on this chart, which means that a lot of companies here are hitting 52-week lows in the S&P 500, as a matter of fact. So instead of having net new positive highs, we are having net new negative 52-week lows on the market. And you can see, guys, that it is the worst that it has been now, and pretty much in the end of October, the beginning of October, the worst that it has been all year for the S&P 500. Not just the S&P 500. Take a look at the Dow Jones as well. You will see pretty much same thing. The worst that it's been, save early October and end of September, all year on the Dow Jones as well. We could take a look at the New York Stock Exchange, everything there. You'll see that there's over 200 companies in the red right now, hitting 52-week lows. Pretty much the worst it's been since your little financial crisis back in March here. It just continues. I could take up the NASDAQ, right? We have over 400 companies hitting 52-week lows on the NASDAQ. So it's not just big tech. It's not just a few things. It's everything. And we're kind of hitting a culmination point, guys. You can see it hit here in March, and then we had a nice little rebound thereafter. But it's pretty much the worst it's been all year since March on the NASDAQ as well. And if you take a look at the Russell 2000, it is pretty much the same thing, right? It was only this bad pretty much in March and May. And now once again, we are hitting a very negative point, guys. So all that to say that we have so many companies right now hitting net new lows that something is going to break soon, right? So keep in mind, we do have Jerome Powell speaking next week, which should be a very, very notable event. They are forecasted to keep interest rates virtually unchanged, but it's going to be his tone and his comments about future guidance of policy here and how hawkish he is on this whole keeping rates higher for longer narrative, guys. So keep that in mind as we do continue to tumble down here. There's a lot of companies that are hitting oversold conditions. We're even hitting oversold conditions in SPY and pretty much QQQ, right? Getting to very, very, very low points in the indexes here. approaching a few major areas of support, especially on the S&P 500. So will this be the cue for the bulls to turn it around here as we approach oversold companies and with so many companies hitting net new lows? I'll remind you, our fear and greed index is still planted down here in pretty much the fear territory here, almost on the verge of extreme fear. So still, in my opinion, represents a buying opportunity. Now, let's get into some earnings. Yeah, starting it off with Amazon. So Amazon here with a very, very good report here, in my opinion here. You'll see that in the after hours, guys, they were up pretty much since the close. They're up over 5% here after hours. Very, very, very good day for Amazon after their earnings. So what actually happened on Amazon's earnings? Well, they had a double beat. They absolutely crushed net earnings. Look at this EPS number, guys, by 60.5% and a slight beat on revenue as well. So let's take a look at the report here. So Amazon reports better than expected results as revenue jumps 13%. Very, very good double-digit gain here. Blew past the expectations here. And what I'll tell you guys is a lot of people were looking at cloud, especially after Microsoft's report and Google's report, right? A lot of people are looking at the expansion of their services in the cloud here. So here's a few of their little numbers here of each of their business units. So Amazon Web Services is actually up. It was up 23.1 billion versus 23.2 billion in expected revenue. Slight miss in terms of the expectation here, but was up quarter over quarter, and of course on the year. Advertising as well is up 12.1 billion versus 11.6 billion in expected revenue. So they did beat on that too. Very, very, very good, guys, right? The revenue is up absolutely massively, which we love to see here, right? So you see that jumped 13% in the third quarter, a sign that the business is seeing some acceleration after a difficult 2022. And we know how difficult 2022 was for Amazon. They did a great job here of cost cutting, right? Been in cost cutting mode for the past year as it became clear that it expanded too quickly during the pandemic, bringing a lot of revenue forward as people were stuck at home ordering a bunch of things on Amazon here. Company laid off 27,000 employees since last fall, right? And it's axed some of its unprofitable bets. So very, very good job in doing cost control here. Sales in Amazon's core e-commerce business, which is their main business, right, continued to recover, expanding 7% year over year after growing 4% in the previous quarter. This is very, very, very good, guys, right? Extremely good to see that Amazon's core business is doing better than expected here, right? And in terms of cloud here, guys, let's jump down to cloud real quick, right? So you'll see that in terms of digital advertising here, ad revenue soared 26% from a year earlier. That's very good, right? You see right here, that's much faster than Google's ad growth, which was 9%, and top Facebook's ad growth, which is their main business, guys. That's Facebook's main business, and Facebook only did 23%. So amazing gains in ad revenue here. Very, very, very good. And in core cloud businesses, it says that Amazon appears to be giving up some market share, but that's not that bad, and we'll see why here. Amazon Web Services, which leads Microsoft Azure and Google Cloud, showed growth in the quarter of 12%. Very, very good double-digit gains. Microsoft earlier this week said Azure, their own cloud service, jumped 29%, which we covered on the channel, and Google Cloud expanded by 22%. So why is that not so bad, guys? Let me pull up a little chart here. So this is the total market of cloud businesses here. And you will see that Amazon this is a chart pretty much outlaying here how much does each business control of the cloud market here. And you'll see that Amazon, this hasn't really changed here over the past couple of years here, right? So Amazon is in control of 32% of the market here. Azure had a slight uptick this year. I should have gotten I didn't see that it was a 2021, but I saw the 2023. It's not that much different. I apologize for that. Azure is up to about 21%, I believe, and Google Cloud is about 11% now. However, you can see that AWS is the market leader in terms of cloud services, and that has not changed. So even though they're giving up a tiny bit of a market share and they are growing at 12%, they are still the leader in terms of cloud services, which is pretty much the best that they can do, right? You want to maintain your market lead and ever expand. So that's very, very good to see them continuously expand on this, right? So it's been absolutely an amazing quarter for Amazon once again as they return to profitability, especially after the negative events of last year. Amazon positioned very, very well, in my opinion, guys, for the near future and the long-term future as well, as they start diversifying away from their core e-commerce business and more into the cloud and advertising business, which you just saw is doing very, very well. So very, very good report on Amazon. I like Amazon at these prices. You guys know my sweet spot, 120 down to 110. Get down there and I will be picking up some shares of Amazon here. Now, second company I want to cover is Enphase. Enphase getting absolutely washed, guys, after coming down so much this year, right? 72% from the all-time high. Could their earnings save them? No. Earnings, as a matter of fact, was an absolute disaster. From the top of the day, guys, we are down almost 20% in the after hours from Enphase. So what exactly happened to Enphase? Well, I'll show you. It's not very good, guys, right? Earnings came in at a slight beat here on EPS by about 1%, but they missed on revenue. But that is not the reason for the drop. The reason for the drop, guys, is their guidance. Their guidance was absolutely terrible. Enphase Energy stock tumbles towards a 3-year low after revenue miss. Full year outlook that's well below forecasts here, and it's pretty bad, guys, okay? So here's the kicker here. For the fourth quarter, the company expects revenue of 300 to 350 million, and the expectation was 579 million, guys. That's like a 40+% miss on guidance. So their revenue is doing very, very, very negatively. They've blamed this on the fact that where Europe is a major part of Enphase's revenue here for their inverters, right? You see US revenue is down 16% and the European revenue down 34%, guys. So a very, very negative quarter for Enphase, and their guidance for next quarter doesn't appear to me much better. You guys know that solar is not very favorable right now. The interest rates for solar installations, even though Enphase doesn't sell panels, solar panels directly, they do sell the inverters to companies who do produce panels. But unfortunately, financing rates for solar installations right now are between 9 and 11%, guys. It's almost cheaper to just use regular electricity than to pay interest on these installations right now, which is why they're not getting a ton of sales, which is why they're guiding down in revenue. And this all has to do with interest rates, guys. In my opinion, solar is going to be a very, very difficult industry until rates have peaked and until rates start coming down so consumers can continue to pivot towards solar installations. But for now, probably for the next 3 to 6 months, guys, solar is going to be a very, very tough industry to be in. It's obviously a great opportunity to buy dips, but if you have a very long-term outlook here, I wouldn't expect this to recover, in the short term here. Enphase really coming down brutally. I'm not in this company. I'm in CSIQ personally. This one still has a relatively high valuation compared to my solar play, and the next support, guys, is pretty much all the way down in the $60 range here, right? Stock trading currently in the after hours here, right at around $80. And the next support, guys, like I said, is all the way down to 60. So quite a little ways away on Enphase. It's really unfortunate. This used to be one of my favorite companies, but ever since interest rates have been high and demand has been lower, it's very, very, very tough to be invested in solar right now, right? Especially for short-term trading. Now let's move on to the third company here. Intel. Intel actually had a very good beat today, guys. So Intel in the after hours here, you will see that they are up pretty much 7.5% here after they did have a double beat. However, it's not all that it seems, guys. Intel still with a bit of problems in its business. Now, where they did do amazingly is this beat on EPS. Look at this beat on earnings per share. 87% beat on earnings per share, which is the reason for their massive price increase here in the after hours. Revenue also beat by 4.37%. Very, very good. However, a lot of Intel's business is still struggling, guys. Intel stock rises on earnings beat and strong revenue guidance. This is true. They also said that they're down on employee counts. They're doing a good job of cost control, right? The CEO had iterated that they would cut costs by about $3 billion this year, which is very good, guys. However, a few of their lines of business are still struggling, guys. And this is what I wanted to tackle, being like, it's kind of a trap here. The earnings were good, but you have to look a little bit deeper here, guys, right? So revenue fell 8% from 15.33 billion a year ago, the 7th consecutive quarter of declining sales. That is not that good. However, the chip maker told investors on Thursday that it expects revenue to grow again in the current quarter. So it will grow, but year over year, guys, we're not doing too well at all. And here's the kickers, right? So sales in Intel's client computing group, including laptop and PC processor shipments, were down 3%. The data center and AI division, which offers server chips, saw sales decline 10% to 3.8 billion. So another line of business down, right? So it's seeing competitive pressure and a smaller overall market for server processors. Not very bad. Mobileye, a publicly traded Intel subsidiary for self-driving car parts, you guys know this is a major competitor to Tesla's full self-driving, was a bright spot, growing 18% to $530 million in sales. That's good, but it's not one of Intel's major lines of business, so it won't save them. And here's another one here, right? Intel's foundry services, the company's nascent chip manufacturing business, remains a small part of Intel with $311 million in revenue. So they're trying to compete here with other chip manufacturers such as Taiwan Semiconductor, which they've said to be one of their competitors here, but it grew nearly 300% from the year earlier period. That's good, guys. But once again, very small line of revenue for Intel, unfortunately, right? And here we go. Intel's Network and Edge division, which sells networking parts, reported sales were off 32% to 1.5 billion. So although Intel had a very decent quarter in terms of net EPS growth and whatnot, it's kind of still a value trap in my opinion, guys. I like Intel stock. I want to give them a chance here to have their recovery story here. And the CEO is doing a great job of cost management, but they continue to lose market share, guys, to competitors here, and they're not on the cutting edge of technology anymore. They're kind of trailing still. So even though Intel does appear to be at an attractive price, and you may be swayed by this more recent earnings push here, guys, just know that in my opinion, Intel does represent kind of a value trap. It may be a good investment if you're trying to time that recovery story for them, right? And they are at a fairly low valuation all the way down here, right? And a very low stock price in relation to their history. But don't get fooled by the superficial numbers, guys. We have to look a bit deeper. And as you saw, their lines of business are significantly down across the board, especially in relation to a year or two ago. So Intel's recovery story is going to take significantly longer than a lot of people are expecting. And now lastly, guys, we are going to cover Chipotle here. Chipotle, once again, with an outstanding quarter here, guys. They were down 2% on the day, but you will see in the after hours here, nice little pop here of pretty much over 3%. Very good earnings report by Chipotle. Chipotle with a beat here on EPS by about 7.65% and a tiny, ever so tiny miss, guys, on revenue here. Not that important here in relation to $2.5 billion that they did produce here. So very good report by Chipotle, guys. Chipotle is one of the strongest stocks in the market. They have outstanding pricing power, and they proved it again. CMG easily tops earnings estimates as higher prices help offset food inflation. So they've been passing on the food inflation to the consumer, and it's been working, guys, right? So same store sales growth of 5%, right? Very good. They've raised prices in relation to their cost of goods being increased as well here. And I'll give you a few little numbers here down here, right? The beef and queso costs rose this quarter, largely offsetting last year's menu price hikes. Very good. That's what I've been talking about, right? The restaurant chain raised menu prices for the first time in more than a year, citing inflation. So they keep on having their aggressive price hike increases here, and the consumers continue paying for them, guys. Very good report by Chipotle as a whole. Their net sales climbed 11.3%. Very good. Same store sales rose 5%, beating the estimates here of 4.6. Extremely good. Credited higher transactions and menu prices for the quarter's same store sales growth. So that's in relation to their pricing scheme, right? Very good. Their prices were up 2.8% compared with the year ago period. So very good in combating inflation here. And here's the kicker, guys. Chipotle opened 62 new restaurants during the quarter. Very good expansion by Chipotle here. Looking to 2024, the company that expects that it will open 285 to 315 new restaurants. Amazing job by Chipotle here. And if you guys know as well, if you guys follow Chipotle, they've been looking into automation processes, which is going to make their cost of manufacturing their food, right, even smaller. So they're looking for profit ways of expanding net margins here. And Chipotle having very decent margins here for a food and beverage company, right? 10.41% as of 2022. And you can see these quarters, their margins are actually getting better. 12 and 13% over the last couple quarters here. Very good profit margin expansion here by the company. Company valuation here, in my opinion, is still a bit rich, but it is well deserving of that. Every single thing points to Chipotle being able to grow even in a high inflation environment. So that's pretty much it for the earnings, guys. Let's get right into our technical analysis here, our major indexes and our major tech names here. Portfolio review will be tomorrow after the close because when we do earnings, the videos tend to be quite long if I include the portfolio as well. And I want to keep them between 30 and 35 minutes here. So SPY here flushing towards the lows here, 1.2% to the downside, guys. Almost cracking, right? If we end up with another red day tomorrow, guys, we'll be cracking this downtrending trend line here. But all is not to fear, guys. We are heading in to our area, which I had highlighted on the chart before, but we'll plop it up again, right? The 420 down to 404, 405 area is your area of support. Very, very difficult to be shorting the SPY into this area, guys. This is the area where you do expect bulls to react. And you guys know from this new highs and new lows chart that I presented earlier that the bulls may have some saving grace yet, right? But as of now, the bears are in full control. Have to give it to them, guys. So bear full daily downtrend control and the weekly downtrend control as well is well underway here. We're going to be looking for oversold conditions, right? Daily is coming into oversold conditions, and you will see that on the RSI, keep these levels in mind, right? On the RSI, we haven't been this oversold, guys, since pretty much last September. So we were here once again in the early part of October, and we are here now again at lower lows here. So approaching oversold territory. Need the market to bottom out here, and then we'll be looking for the bulls to change into a daily uptrend. But as of now, the bears are in absolute full control. In my opinion, we're going to need big tech turn this around here because of the sheer amount of weight that they represent here. We are pretty much through big tech earnings, only Apple remaining to report next week. Now let's move on to QQQ. QQQ still in your daily downtrend here, right? In line with our channel, just barely closing below our 200 daily moving average, guys. That hasn't happened since all the way back in March here, right? And you can even see on the RSI, we're pretty much getting to these lower levels that we hit once before in September and in August here. And before that, guys, you would have to go back to last December or last September as well to get those lows here. The support zone for QQQ is a bit lower, however. It's between 335 and 320. I don't know if we're going to get all the way to this lower area here, guys, but one thing's for sure, we are approaching oversold conditions here, so we need to wait for the market to get oversold and bottom out here. You will see that on the 4-hour time frame as well, we are extremely oversold, so we're getting there, guys. Things are starting to hit the fan, and I think that this sell-off is largely unwarranted, number one, but maybe coming to an end soon. So just hold on tight, continue accumulating your buying power here and continue shopping for good deals in the market. I am very, very bullish on the next 6 to 12 months, and I do think this sell-off represents a great opportunity. But for now, bears in full control of this market need to wait for those oversold conditions and for some reversal here. Now let's move on to financials. Financials down 0.22% on the day here. You can see that this is pretty much a bear flag, right? So holding near the lows here. Wouldn't surprise me if we do have another red day tomorrow that the bears do flush and just continue this daily downtrend to the downside here, right? Not yet oversold as much as we were early October, but we are very low on the RSI levels, guys. If I do say so myself, we are still in a weekly downtrend here. So if the week does continue to the downside here, you guys know that the big support area comes 31.50 down to about $30 here, guys, right? So keep an eye on that. Yes, bears are in full control now. We need to see these charts bottom out, and then the bulls need to have a turn, bounce, and change these into daily uptrends. As of now, though, financials not looking the greatest, guys. This could be a bear flag for lower lows here. My expectation is that we roll into these 31.50 all the way down to 30 areas, guys, and that's where your bulls should step in for some major support here. So let's keep an eye on that. Take things day by day. XLV Healthcare with a very, very bad day here, 0.99% to the downside, right? Daily downtrend simply continues here. Look at the momentum to the downside on healthcare, guys, over the last 7-8 trading days. Not very pretty at all, if I do say so myself. We're getting a little bit of a volume climax right here, which is what you want to see, coupled with volume climax and oversold conditions here. May just be due for a bottom soon. We're at the bottom end of the little channel that I drew here, 125, right? And we're getting close to go time for the bulls here, guys. This has been the area where you've had the most amount of reactions in the past. Yes, it goes a bit lower, all the way down to 121, but we're getting into that zone here, guys, where it becomes crucial for the bulls to step in, right? Weekly downtrend is in motion as well. So at this point, similar to all our other markets, we are going to wait for max pain, for max fear. Get me the oversold conditions, get me the volume climaxes, get me the gap down opens, everything, and we will eventually find our relative bottom here. Then we will be looking how high can the bulls bounce and can they reset these trends to the upside. But as of now, guys, the bears are in full control of the daily and weekly charts on all of our major indexes. Now, IWM Russell pretty much exactly the same, right? Daily downtrend is controlled by the bears at this point, hovering around the lows here, hovering within my sweet spot as well, but I'm not trying to catch a falling knife, guys. I need to see the markets kind of chill out down here and stop these pretty much waterfall drops that we've been seeing, right? Look at how aggressive this moving average has been coming down here, right? So daily downtrend, massive weekly downtrend as well, and we're coming to the lower end of my sweet spot, but we're also coming into this massive range here. This range was previous resistance for a very long time in the markets here, 2018 all the way through 2020. So that's why it's been acting as some decent support. So I do expect the bulls to react in this area. I would be very surprised if we continue flushing beyond this area here. So we need to watch out, guys, here, right? This whole area, which I'm talking about here, is the area that we're in, 168 all the way down to 158. This little range is where I'm expecting a reaction from the bulls. We are getting some volume climax as well. We do have oversold conditions. So in my opinion, guys, we're almost there. We are approaching maximum pain, and just keep your eye out for Jerome Powell next week and what he comments on the yields. And now Dow Jones, lastly here, Dow Jones once again reiterating bear control here. So daily downtrend is once again confirmed by the bears here, right? On the weekly, it's not going to look any different here. We do have a little weekly downtrend by the bears as well here. And we are approaching the end of my little region that I drew here, right? This is the spot where you've gotten the most reactions pretty much all year from the bulls. Yes, it does go a bit lower into the 31,700 area back in March here, but this is the main area that we will be focusing on for now. So the bulls have to step in and do something soon, right? We're running out of runway, as they say. If not, we will be heading to lower lows, and you would not like to see that, because then on the monthly, guys, this is your monthly lower low. So I need the bulls to really put a stop into it in the area that we are right now. We will see. We are approaching oversold conditions, right? You see that on the chart right here. So it's going to be very interesting to see if the bulls can put a stop to this. As of now, the bears in full control of the daily, full control of the weekly, guys. I wish I could tell you exactly where these things are going to stop. All I can do is point out likely areas of support and resistance and point to oversold conditions, guys. That's what we have to keep our eye on. We're looking for reaction zones, right? It's very tough to pinpoint exactly where it's going to turn around. The best we can do is pinpoint reaction zones coupled with oversold conditions to get our bounce. And then it will be, once again, the size of the bounce will be crucial to see if our markets can bottom on these daily and on these weekly levels. So just keep an eye on that. We're going to be watching these one day at a time as usual, guys, but decent buying opportunities in my opinion. And now let's get into big tech here, guys. So big tech here, starting it off with Apple. Apple having a very bad day here, down 2.46%, flushing our last area of support on the weekly here, 168. So unfortunately, guys, with that last flush here, yes, it is a daily downtrend, but now it is, unfortunately, the furtherance of the weekly downtrend here. So Apple continues the weekly downtrend, will be continuing monthly consolidation at this point, guys. Your next likely area of support at this point becomes down all the way to the 155 area. There's a little one up here around the 160 mark, these guys right here, but the bigger support is all the way down between 155 and 150 pretty much, right? So we're going to be keeping an eye on that for Apple. I do think that Apple represents some very good value at these levels, even here, right? We have earnings next Thursday, which is going to be crucial for Apple, but at this point, we have breached our major areas of support. Bears in full control of the daily downtrend here, guys, in full control of the weekly downtrend as well. So at this point, we're just going to be looking for a few factors. We're going to be looking for our oversold conditions, which we're already in, and we're going to be looking lower for our little areas of support. On the daily here, you can see the 160 area has a couple, but then really it becomes this area 155 to 150 is the big one. So if earnings is bad, we could end up pushing into these lower areas. But if earnings are good, guys, it may give us a good chance to get back up into this little buy area here, set up for a potential daily trend change. But as of now, bears in full control of this chart. I like Apple at these levels. Don't get it twisted. Now, AMD as well, continuing to plunge to the downside, 2.48% to the downside here, right? So daily downtrend continuing by the bears here. Very aggressive sell-off by AMD. They have earnings next Tuesday, so that's going to be make or break for AMD, guys. If we get bad earnings, guys, we may even be heading down into the mid 50 area, which is our pretty much monthly support here, right? You will see it better on this monthly chart right here. The last rise was about 85, right? So monthly uptrend. We've been waiting for AMD to reverse this for the past 5 months, but they've just been in a steady decline. So 85, 86 remains our last line in the sand level for the bulls on the monthly here. So getting dicey on AMD. Now, the weekly downtrend just continues. They had a great opportunity over here in the early October to reset this weekly uptrend to the bulls. Unfortunately, not able to pull through. The weekly downtrend simply continues at this point, guys. So we will be waiting for earnings next Tuesday to determine what's going to happen. If earnings are bad, we could end up in very, very oversold conditions on the daily timeframes here, right? And it could be due for a culmination sell-off event, and that may be indicative here of a local bottom, a better area to be placing some options trade off of. Definitely if we come down into the lower 80 areas, guys, I will definitely be writing more options on AMD, looking to pick up more shares of AMD down there because I think it represents good value. But as of now, bears remain in full control. Now moving on to Amazon here. Amazon down 1.5% on the day, but obviously you guys know we went over their earnings. They're actually up back to 126 on the chart here. So that's pretty much this area right here, right? So Amazon doing a great job here in the after hours of pulling back. Daily downtrend is confirmed, but now with the earning bounce, can they reset for the daily uptrend with this renewed shareholder interest after very, very good earnings, right? So we will see, but Amazon with a good chance of being able to do that, guys. You saw that today we bounced right in my sweet spot. I didn't write any options because it was earnings today, right? But this was a very good opportunity for a pickup, guys. It remains, even if we continue for some reason to sell off back in this area, I will be very interested to be writing some options of Amazon down here. You guys know daily downtrend and currently weekly downtrend as well. So we will see how high can the bulls bounce on this most recent earnings move, guys. If we bounce all the way up to 128, could set us up for a daily trend change here and a nice little weekly reversal here of the downtrend here. So we're going to keeping a close eye on Amazon. Amazon with a good chance of being our first bull to potentially do this. Microsoft unfortunately gave it back today, so we'll keep an eye on Amazon. Can Amazon be our saving grace? Can they be the first person to reset daily uptrends to the upside? We will keep a very close eye on it. Now let's move down to Google. Google here with a heck of a drop today. Again, today, 2.55%. If you take a look, guys, right, from the high before earnings here, we are down like almost 13%. That is a very, very big move down by Google. Very unfortunate here, but we did fill the remaining part of the gap, which we talked about in yesterday's video, all the way down to about 123.5. That's roughly where we ended today. So Amazon bouncing off of this gap fill area and bouncing off of your 200-day. We haven't tagged the 200-day, guys. This is pretty much back in March and April, right? So significant area. I will remind you, if we continue to plunge here on Google, 120 down to 110 is pretty much my sweet spot on this stock. We do have a very, very solid area of support in this area. So in my opinion, especially coupled with oversold conditions, it's going to be tough for the bears to rip through this area in one clean shot here. So guys, buying opportunity, in my opinion, for myself is coming up on Google stock here. Very, very solid bear control. Have to give it to them at this point, right? Any single bounce is going to be for a lower high compared to this high right here and potentially revisit of these lows by the bears. So we'll see once they bounce, how high can the bounce get, right? But as of now, still in the after earnings volatility move. And you will see even on the weekly, guys, we sacrificed this weekly uptrend. It was a beautiful weekly uptrend this whole entire time. And now, unfortunately, we've lost the weekly uptrend. We've not set a weekly downtrend yet, however, right? That would require a lower high and lower low pattern setup, right? But as of now, loss of the weekly uptrend. What the bulls need to do to recapture this is simply two-step it, recapture the weekly uptrend like you saw Meta do, right? So that is what has to happen on Google. But if we do come down into here, this is your next major area of support where I will be looking to buy. Now let's move on to Meta. Meta here, very, very negative day on Meta, guys. Even their after hours earnings could not save them yesterday, right? You saw that they actually ended up, then went down on the earnings call after hours here, guys. And today kind of traded very, very, very negatively as well. Not able to generate much momentum here, ending 3.73% to the downside here, but rejecting out of our support zone. So you guys know I had labeled this on the chart prior. 287 down to 277 was our area of support. Nice to see the bulls finding a little bit of base of support line down here. So if the metal bulls do bounce, right, we will need to see how high can the bounce get in relation to 318, right? Daily downtrend, So how high can the bounce get in relation to our most recent lower high? Needed to see them get as close as possible to 319 to potentially reset this, because as of now, bears are in full control here to the downside. Do not want to see the meta bulls lose this area, guys. That would not be good. That is pretty much your previous monthly lows right here, right? So even on the weekly, guys, right, we had a nice little weekly uptrend going here. A loss of the weekly uptrend because we flushed these lows, but not a weekly downtrend. This is what I was saying on Amazon, right? So they set the weekly uptrend, lost it, but a weekly downtrend would be this, right? Not a weekly downtrend yet. The bulls still able to save it potentially in a two-step fashion, just like they did right here after this big move down right here, right? So Meta will be taking this one day at a time, but now I need to see, can the bulls reset the hourly trend change here, right? Can they reset the hourly trend change? And can that translate into a decent enough bounce to where we recapture this? Because Meta earnings were good. They were really good. Just a few little comments, guys, by the CFO in relation to geopolitical events sent this thing down a lot more than it should have, in my opinion. Meta with beautiful earnings. I do not think that sell-off was deserved at all. So we'll be watching this one day at a time. Now let's move on to Microsoft here. Microsoft pulling down here 3.75%, sacrificing all of their earnings gains, guys. Look at this, right? So down 5% from the peak of the earnings here, giving it all back. Unfortunately, very unfortunate for Microsoft, because Microsoft earnings were absolutely outstanding, in my opinion, guys. So it just goes to show you market sentiment is just not there right now. Still a daily uptrend, guys, but the bears have now taken back a lot with this move. Your higher low is right here, 324.52. If we flush this, guys, it would be a loss of the daily uptrend, and then you would have to look on the weekly here. Can the bulls hold this weekly trend together here, right? It was a weekly uptrend here. Now you need to look to the lows here. 310 is going to be the area to watch. Need to see the bulls put a stop to this and potentially recover here into the end, into the later part of the year, into the end of Q4 here. So going to be very, very crucial to watch what Microsoft does. One thing's for sure, guys, need to stay away from these 310 levels, right? They still have a decent area of support in here, but give too much of it back, guys, and it sets the bears up for a daily trend change to the downside here. If we do come down here, however, it's a massive buying opportunity for Microsoft, in my opinion. 310 all the way down to 285. That is the zone that I've been eyeing for quite some time on Microsoft at this point. And with the earnings that they just had, guys, there's really no reason to not buy that company. If they do come down here, it would be a much deserved discount for anybody interested in shares at that point, guys. We'll take this one day at a time. We'll see if this support can hold. Definitely a very, very negative day on Microsoft, however. So now let's move down to NVIDIA here. NVIDIA, oof, guys. This is what I was thinking today. The entire day on NVIDIA, I was thinking like, oh my goodness, guys, are we going to flush the 404? And we actually did, right? So daily downtrend confirmed by the bears at this point. Hate to see it. So now we zoom out to the weekly at this point, right? And even on the weekly, guys, weekly downtrend in motion. The bulls need to step it up here. It is now or never for the bulls, okay? If the bulls can reverse this here shortly, they have a chance at resetting the daily uptrend. If you lose this area here and continue plunging below 400, you will then be in monthly pullback territory. You will also be in your first weekly downtrend since the entire year, actually in a whole year since pretty much last August and September, right? So NVIDIA, with the possibility of setting the weekly downtrend here, guys, and weekly downtrend, your support level, guys, the last one is pretty much 376. Below 376, it is a long way down. So you'll see this is the area of support after that massive earnings here 2 quarters ago, and then it comes all the way down into the higher 300, into the lower 300s here. Your only saving grace is the previous all-time highs, 340 to 350, all the way over here, right? So heck of a way down for NVIDIA if we lose this area. So now is make or break, do or die for NVIDIA, in my opinion. Obviously, some discounts would be appreciated for anybody who's missed the boat, but you would never like to see one of your market's lead bulls lose the weekly like that in such a fashion, right? So we're going to keep a very close eye on NVIDIA over the next few days. Crucial for the bulls to put in a bounce here, get as close as possible to 438. Could set up for a daily trend change, but anything below that, guys, and it's going to be very, very challenging for the bulls to recover this if we start going into a weekly downtrend here. Your levels of support are down here in the 376 area, and then we're talking about 350. So let's watch it very, very closely. Now let's move down to Tesla. Tesla here with a very terrible day here, down another 3%, approaching our 200 psychological level. So your bears remain in full control, right? The bounce here, as I was saying in yesterday's video, not enough of a bounce So now the bears have a chance at flushing your post-earnings low here of 202.58. If they do that, well, your daily downtrend simply continues at this point. Tesla massively oversold here on the daily time frame as well, and your weekly downtrend does continue as well, right? We're approaching the end of my sweet spot, guys. This is the buy zone for Tesla, but it's tough for me after those earnings to catch pretty much a falling knife. I need to see a bit of a more of a bottoming out process here, especially on, well, first on the daily chart, and then we need to see a weekly little bounce undergoing here to really set the bottoms here. But your support levels after this, right, come down here all the way to about 195, all the way through 190 is going to be your 200 weekly moving average here. You can see it better on the daily, right? This whole little area here, right, is going to be a very, very contestable area by the bulls, right? So all of this previous resistance here from pretty much the 210 all the way down to the 180 level, that is going to be the level to watch on Tesla here. So they're coming in hot to this area, but at least we do have quite a bit of support down there. So it remains to see where Tesla will bottom out. But one thing's for sure, guys, we are getting pretty oversold on Tesla. And whenever we get pretty oversold on Tesla, you can see that usually the stock does bounce, right? So looking for the bottom on Tesla. If it continues to plunge here sub 200, I might be interested in the next few weeks of writing some puts on Tesla here. So we're going to watch this very, very closely, approaching your last areas of support down here, right? So decent levels to watch out for, 190, 185-ish. And now let's move on to our two last ones, Palantir and PayPal. So Palantir here, Palantir doing a good job here of not just absolutely falling apart, even though we had, 4, 5, 6% losses today in the market, guys. Palantir down only about 2%. So daily downtrend is continuing at this point, guys. Need to watch out. Your next area that I'm going to be looking out for, guys, is the last line of defense, 1366. I know we have a bit of a area before that, right? We do have earnings on next Thursday. That is going to be the crucial point, guys. Why? It is your weekly higher low, and it is also the area that the bulls have been contesting here on the monthly too. So next week's earnings are going to be absolutely crucial. I do think they're going to be positive earnings, but you guys know with recent market events, even positive earnings can somehow end up with double-digit negative after-hours moves, right? So crucial area for Palantir to defend at this point will be your 1385. If we do get below that, guys, you know that I'm a big buyer of Palantir in roughly the $12, $11 range. Can't say if we're going to get that low, guys, but if it does get that low, that's where I'm buying. So crucial to watch out for earnings. But as of now, bears are in full control of the daily downtrend at this point. So we're going to be looking for eventually the bulls to put in some signs of reversal with a daily uptrend reversal pattern here. On the weekly, we are just looking to protect this area. It is a weekly uptrend, but the bears cannot take back too much, or else the bulls will have to take longer to reverse this, guys. So keep a close eye out on that for Palantir for next Thursday. And now lastly, PayPal. PayPal with a bit of green amongst the sea of red today here, but not having much to show for it, guys. We are still in a daily downtrend on PayPal here. PayPal with earnings next Wednesday. As I've been saying, if PayPal earnings are good earnings, as they have been for the past few quarters, but for some reason just get destroyed in the after hours after earnings, and we go all the way down into the 40s, guys, that is my average down. That is where I'll be looking for shares of PayPal. We are already in oversold conditions here on the daily. We've been there for a while. On the weekly as well, you can see that we're very low on the RSI. So I think we are approaching the area of max pain on PayPal. It's been such an extended drawdown here, guys. Weekly downtrend, right? Daily downtrend just is perpetuated at this point. We've dropped a lot since our previous area of support 57. We're down pretty much another 10-15% in relation to that. So don't want to catch a falling knife before earnings. I'm waiting for earnings. And then if we get a massive gap down, some 6, 7, 8, 9, 10% to the downside for XYZ reason, that is when I'm going to pounce on these shares, but I do not want to play them before earnings. It's very possible we get a bullish earnings release as well and start recapturing some of these gains. But until I see my daily trend reversal on PayPal, I'm not interested in averaging into this stock. Right, so I need to see how we do after earnings. I think that if earnings do bad, it will be pretty much the last leg down for PayPal, because I think the company is extremely cheap here, guys. And the sell-off is getting a bit overdone, in my opinion. That's just where I'm going to be looking to buy personally, right? But as of now, holding up decently on the day, up 0.5%, but not much other than that to show for it, guys. Bears full control of the daily, and obviously full control of the weekly downtrend as well here. So I hope you appreciated today's video, guys. Sorry it was a bit long, but a lot of earnings to cover, of course, here, guys. And we did go over a few high and low charts for the indexes. So guys, just stay locked in. I know it's very, very painful right now. I'm even feeling it too, but in this In this environment, you need to remember to stay focused and to build those shopping lists really, and to be not scared to invest in companies that you believe in, companies that are profitable, companies with decent growth on the horizon, right? So invest in these companies, because in the next 6 to 12 months, you'll be thinking back on all these negative times and wondering, why didn't I buy more, right? It's, in my opinion, very, very tough to short the market when we're approaching big time support levels on the SPY right now. So a bit of a missed opportunity on a short. Shorts would have been pretty much at the highs of the market. Now is the time to be averaging into companies that have been getting unfairly sold off, in my opinion. Just look at big tech, guys. Big tech has, for the most part, had beautiful earnings. Very beautiful earnings, but because of negative market sentiment, they've pretty much reversed in the after hours. The only one that had negative earnings, in my opinion, of all big tech was Tesla. Netflix was amazing. Amazon was great. Meta was outstanding. Microsoft was amazing, right? So all these things, guys, right, come together. Meta was amazing as well. We'll see about Apple. So all of these big tech earnings were great, but just negative market sentiment has a bit ruined them, unfortunately. So that's pretty much it for today's video, guys. I hope you appreciated it. If you did, consider liking the video. I really appreciate you. Consider subscribing to the channel as well. It really helps us out here for the YouTube algorithm if you're new here, if you like the video. And as always, if you have any questions, please leave them down in the comments and I'll be happy to answer anything trading strategies, macro, options, stocks. I got you. I'll get back to you within the next 24 hours. So take care, guys. I'll see you after the close tomorrow, and peace.